How you doing, everybody? This is Martin Mesa from Rate One Financial Incorporated in Sierra Madre, California. Welcome back to another episode of Mortgage Mind. Today we're talking about first-time home buyer loan programs that just got easier. FHA stands for Federal Housing Administration. It's one of the most common, most popular loan programs in America that really benefits first-time home buyers because it allows you to buy a house with as little as 3.5% down, which is a very small down payment amount if you know what typically is required. And that's typically the most biggest challenge for first-time home buyers is getting enough money for the down payment. But with FHA, 3.5% down is all that's required. And in some cases, you can even combine that FHA loan with a first-time down payment assistance program that will allow you to buy a house with even less down or possibly no down payment. So it's a very common loan program, a very advantageous loan program for folks that want to buy a house. They don't have to be a first-time home buyer, but it's really beneficial for those people that are first-time home buyers that have no down payment. So what FHA has done as of, I think, June 17, 2021, is they've lessened the restrictions on qualifying if you have student loan debt. So before June 17, 2021, what they would say is if you have a bunch of student loan debt, or any student loan debt for that matter, unless the current repayment plan has the right kind of documentation and is the right type of repayment program, they are going to hit, which is a little bit restrictive, by the way. I'm not going to get into details, but they're going to say if you don't meet those requirements, they're going to take 1% of that loan balance and hit you with a monthly payment of that amount. So for example, if let's say you owe $100,000 on a student loan, they're going to say, okay, unless you meet these stringent requirements on your repayment program that's documented, you're going to have to take a 1% hit on that. So 1% of 100,000 is $1,000 a month. That alone right there will probably lower your purchasing power by as much as maybe $150,000, $200,000 in terms of a sales price. That's a pretty big reduction, okay? So what FHA has done as of June 17, 2021 is they said we are gonna loosen that restriction, and the requirements in terms of the repayment program that they will now allow you use are a lot less restrictive. So if we run the credit report and on a $100,000 student loan debt, if the credit report says the monthly payment is $20 a month, we can just use $20 a month. It doesn't have to be a certain type of repayment program like under the old way. And if all else fails and you don't meet, that new, much less stringent requirement for documenting what your repayment amount is, you're only going to get hit with 0.5% of the balance. So before, on a $100,000 loan, the lender would have to hit you with 1% or $1,000 a month. Now, if you don't meet these less stringent requirements, which a lot of people now do meet, you're only going to get hit with a 0.5% payment on that $100,000. So instead of $1,000 a month, it's only $500 a month. So that alone right there, just that change from 1% to 0.5% of your balance, will typically allow somebody in this example to qualify for a home purchase price of about $100,000 more than they would have otherwise qualified for before the change happened on June 17th. So anyway, I thought that was a very positive update by FHA. It's really going to help a lot of first-time buyers, a lot of buyers in general that are looking for an FHA loan and have a lot of student loan debt. It's going to help them qualify for a larger sales price, get a nicer home. So anyway, hope that helps. Hope you like that update. If you have any questions, feel free to call a loan officer in your area or call us. We'd be happy to talk to you about it. Thank you again. Have a great day. Hey, if you guys like what we're talking about here, please like and share with your friends and family.